This is episode 1129.
I would say that financial success, at least our next big target, is to hit the $1 billion mark. We're looking to achieve that. And within the next 5 years, hopefully more like 4 years, the public accounting space is really shifting and moving over the past couple of years. There's a lot of private equity, but there's also a lot of acquisitions going on firm to firm. You have a lot of accountants that are getting close to that retirement age, and maybe they don't have a succession plan. Maybe they don't have other partners in their firm that can maybe buy out the book of business, or maybe they're growing in their space and they don't have the staff to be able to do that. And so we see that as a really great opportunity and really a catalyst for us being able to achieve those financial targets that we have.
When a professional services firm takes on private equity investment, the dynamics of leadership change overnight. Suddenly, the CFO's role isn't just about financial stewardship. It's about redefining how the entire organization operates, grows, and competes. That's the environment Laura LaPeer stepped into at UHY this summer. Last time Laura joined us, she told us about one of her keen abilities is to strip away complexity, to find the common thread. We suspect that will serve her well as she opens this latest CFO chapter. CFO Laura LaPeer joins us after this.
It's planning season again. Do you feel prepared? You're not alone. Many finance pros like you feel the pressure this time of year. But with the right tools, it really doesn't have to be so stressful. Introducing the annual planning checklist from Planful, a game changer for your 2026 financial planning process. With this checklist, you'll stay organized, reduce errors, and maintain confidence throughout the planning season, setting you and your team up for a successful year ahead. Don't let planning season get the better of you this time. Get ahead of 2026 by downloading the annual planning checklist from Planful now.
Hello, CFO Laura LaPeer is back with us. Laura began her career in Big Four public accounting before transitioning into industry, where she rose to VP and corporate controller roles. Along the way, she helped guide companies through acquisitions and system overhauls. Now, as CFO of UHY, and that's a bit of news for us, she's navigating the firm through a period of technological transformation and evolving client expectations. Laura, welcome back.
Hi, Jack. Good to see you again. Thanks for having me back on.
Yeah, well, again, a bit of news over the summer. You are now at UHY. Congratulations.
Yes, thank you. Really excited.
You had this great insight about yourself last time, that you had an ability to communicate complexity with clarity, and you distinguished yourself in the past by being able to do that. And what I was going to ask you about was, how has that come in handy recently, your ability to communicate complexity with clarity? How's that for an opener for you?
No, it's a good one. And it's a refresher of some of our conversations we had about a year ago. Yep. Yeah, I have found that that's something that has helped me be successful in my career, and certainly in my new role here at UHY. Being able to break things down to kind of meet people where they're at, and quite honestly, where I'm at. Being new to an organization, I'm in the seat now where maybe I'm the one that doesn't know the answers, and I'm the one that's trying to understand those complexities. So I think just having that ability to say, well, let's just back it up a little bit. Let's start here, and let's try to build off of it. I find that you could pretty easily find some common ground with people, with their experiences. It certainly doesn't hurt that I'm still in a public accounting field. And so there's a lot of similarities that I see. And so that's where I've found that I've been successful, is really trying to find what is that common thread that you can connect someone back to. And once you kind of join together on that common thread, then it's easier to go down a complicated path together.
And I'll mention, when we were last together, again, you invested 4 years at your last CFO tenure at Plant Moran. I just want to ask you, that experience in any way, did it reshape your thinking about how a CFO adds value? And again, you joined that organization as a controller, came up through the ranks, you become the CFO, you have this 4-year tenure. What did you learn? Has it reshaped your thinking around how a CFO really brings value?
Yeah, again, both at Plant Moran and here at UHY, you're a CPA among CPAs. And so I think the value that you look to add is how is the CFO maybe different than the other CPAs that are the partners in the firm. And I think that piece is that business lens. And a lot of that is what I got from my time at ProQuest, of being at a company that was growing, being involved in the business drivers, doing a lot of M&A. So you saw a lot of other businesses. And that really helped me at Plant Moran to, in that CFO role, bring that business lens to it. Now here at UHY, with some of the structure that's changed with private equity investment, the CFO role has more of a seat at the table, I'd say, than maybe at Plant Moran in terms of on the leadership team and really being able to get involved in that strategy, in the M&A. UHY is very acquisitive in nature, which is one of the things I loved about ProQuest. So I find that having the background that I had as a CFO at Plant Moran, but also as a controller at ProQuest, really does help me bring that lens, that business lens, to the role here of CFO at UHY.
So let's find out about UHY, what sets it apart, perhaps the opportunity that you saw, and then I'm going to ask you something related to that. But tell us about this firm. What distinguishes it?
Yeah, UHY is actually relatively similar to Plant Moran, especially in the sense of not only are they in the public accounting space doing audit, assurance, tax, consulting, and advisory services, but it's also like Plant Moran in that it's literally 10 miles down the road from where I used to work. So Midwestern firm has grown over the past several years, more so via acquisition than via organic growth. I'd say what sets them apart is not only are they very M&A focused in their growth, looking for both organic and acquisition related growth, but I think that lends itself to more of a entrepreneurial sort of mindset in its team, in its partners, in its staff. And then what does that bring for our middle market clients? A lot of middle market clients are seeing convergence in many industries whenever it comes to acquisitions and divestitures. And so to have a business, to have the leadership of the business, the ownership of the business, having that same entrepreneurial spirit to it, it allows us to meet our clients, again, where they're at, and to be looking on how to support them in their transformation to meet their strategic initiatives in a different way than maybe might go beyond the audit or the tax services that they've engaged us for initially.
So tell us something. Let me ask this broadly. What does financial success then look like for UHY?
Yeah. So we look to continue, again, to grow organically and through M&A. I would say that financial success, at least our next big target, is to hit the $1 billion mark. Mm-hmm. We're looking to achieve that and within the next 5 years, hopefully more like 4 years. And so that is our next financial strategic objective that we have. Obviously, we want to do that in a fiscally responsible way. As I mentioned, we do have a private equity investor that joined us actually at the end of last year, so just a little more than 6 months before I joined. And I think that helps us with some of our focus as well of where is it we're trying to go with our top line and also with our bottom line as well as we continue down this path. The public accounting space is really shifting and moving over the past couple of years. There's a lot of private equity, but there's also a lot of acquisitions going on firm to firm. You have a lot of accountants that are getting close to that retirement age, and maybe they don't have a succession plan. Maybe they don't have other partners in their firm that can maybe buy out the book of business, or maybe they're growing in their space and they don't have the staff to be able to do that. And so we see that as a really great opportunity and really a catalyst for us being able to achieve those financial targets that we have.
So when we talk about growth, is it geographic, service line, or is it something else?
Yeah, great question. It's all of the above. So we have a lot of ground to cover whenever it comes to geography. We're very Midwest based. We have good operations in terms of spanning up the East Coast, kind of Northeast. We also have not just kind of this Great Lakes region that we're in, but also a little bit more Midwest into Iowa, St. Louis, and we started to expand more south as well. But we have a lot whenever it comes to the west side of the country that we barely tapped into. We have one office in Irvine, California, but really have a lot of space there. So that's definitely one of our areas that we are looking at. However, we don't want to just jump too far over on the West Coast now, and we don't have the kind of suite of other offices to support it, because what you find is during busy season, you kind of need resources from everywhere. And so having offices that are within a couple mile drive helps you to resource constraint, to have to deal with those resource constraints that you might have. So we want to be strategic in when and where we make those more West Coast, Western U.S. acquisitions. But we also look to expand some more of our services. So a lot of accounting firms are seeing benefit to outsourced accounting services that maybe small companies might need. They need somebody to be their back office. That's definitely an area where we've seen a lot of growth. It's our CAS service, continued valuation work. Continued tax work, I'd say, especially with the big, beautiful bill recently passing. There's always a lot of tax reform, tax requirements. Tax is constantly changing, so state and local tax is another area where we expect to continue to grow as well. So it's not as much about new service lines, maybe expanding a little bit more into some other industries, but really solidifying our footprint and dealing with some of the specialty services that support around our existing business. So tax specialty services, acquisition related specialty services like quality of earnings, again, valuation work. So looking to expand those services that we have.
And that services expansion, does it align with where you're looking to make some of your larger internal investments as you look to beef those areas up?
It does. I mean, I'd say that some of our internal investments, though, Jack, really have to do with becoming ready to be that billion-dollar firm. So UHY historically got to where it's at right now by being more regional based, and it almost operated by being maybe 3 or 4 individual regions. You had kind of the Northeast, the Great Lakes, and the Midwest region, but really to come together and meet those financial targets that we have and grow and expand our footprint, we really need to come together as one firm, one UHY. And a lot of that is the model last summer that was put forth when we were bringing on our equity investor. And so from a technology standpoint, what we find we actually have to do is, back to our last topic that we've had, which is when we were at Workday, it's looking for what is that ERP system that allows you to grow, allows you to be agile as different things in the industry change, different things with your clients change. So we actually did a Workday implementation in January here at UHY before I joined. And so that was, one more reason why it was kind of a good fit for me to come aboard, is not only was I in public accounting and 10 miles down the road, but I've been down that Workday path. And so some of our investments are definitely to help support our areas of growth, but we find that technology side, that enterprise system, having a data warehouse, having consistent reporting across your data sets as you bring those separate regions together into the One UHY model that was kind of solidified about a year or so ago.
Okay, interesting. So it's coming into focus now, the opportunity perhaps that you saw before you, which is this investment was happening. They were putting already new systems in place. And there was going to be investment in future properties coming part of the enterprise here. How am I doing? And you had the opportunity to step into that and have all that sort of private equity smarts behind you as well. How am I doing?
Yeah, I mean, when I was at ProQuest, we had private equity ownership there as well. And so
That's right.
I know the private equity world. I know the different demands that can come from it, the different benefits come from it, but the different business model that comes from it as well. And so, great opportunity there. And as you said, the different pieces that lined up. For me, this is also a firm that's looking to come together where maybe it had disjointed. And I'd say at ProQuest, it was built for growth. At Plant Moran, it was built for growth. And now at UHY, they're primed and ready for that growth. And that's an area that I've always had a lot of kind of strength in bringing that to the table, trying to get people around the table to see, maybe we don't care about the $10 and the 10 cents anymore. We need to be looking more about what's material. How do we get economies of scale? How do we streamline, optimize some of the executive Lean Six Sigma courses that I've taken in the past? And so it really was kind of a good opportunity to get back to what I say are the things that fill my bucket.
So when you arrived here, again, you've been in these other organizations and you've seen sort of the insight that's being pushed out to the partners in other firms. Is the quality of the decision-making tools where they need to be?
Right. It's actually really a great time for that too, because they operated in more of a regional view, we had regional leaders. And so it's been great for me. I actually was out at our Long Island, New York office just last week with the 3 regional managing directors and joining them in some of their offsite meetings that they have where they get together a couple times a year and talk about what the path forward is. And as you can imagine, this time the path forward was a little bit different than maybe last time they got together, because this wasn't about what happens in Midwest, what happens in our, Northeast or Great Lake region. It was about how do we as a firm move forward and what are some of the offerings that might have been specific to an office that we are nationalizing now. So we're taking some of the specialty services that maybe we just had people in Atlanta that knew how to do. And we're saying, well, we should be providing those services across the whole firm. And so finance has a very big seat at that table, partly because we see all of it, right? We see all the different service lines. We also see the economics of it as well. We see where the high growth capabilities are. So, people might see maybe just their area of where there's growth, where we see firm-wide, where should we be investing time and energy? Where do we need leaders to maybe spend more attention on a certain service area because we see that opportunity? Where do we see more cross-sell opportunities? So I'd say that very early on, while I'm still kind of getting up to speed on a lot of the history, it's allowed me to get up to speed quite quickly because we are going down this path now. And I'm jumping on maybe 6 months into the private equity investment, but we're at the point where we're building our budget for next year. So again, great opportunity, great time. We're a December 31st year end, so we're building the budget right now. And so working with these, managing directors that are on the leadership team to understand what do we see next year is going to look like, where do we see those growth opportunities out there, and make sure that we're kind of huddling around it and we're investing around it and we're helping our leaders have the investments, the initiatives, and the support that are needed to grow the areas that we think are the prime opportunities. So it's been really great for me. They've been really welcoming to me to kind of have me sitting around the table and have, maybe 2 hours on the agenda that might turn into 4 hours on the agenda. But it's great to work through it with them.
Now, of course, you mentioned earlier in your career, you were with a company that had a large investor, a PE investor, I guess. You weren't CFO at that time, no? And you are today. So there is a unique communication between the CFO and that investor. Can you reflect a little on that and how, again, you clearly were recruited. I'm sure that investor was aware of, Laura LaPeer is going to be here today. Let's be certain to talk to her, get to know Laura. Open that channel. If we're going to go forward with her, let's make sure we have a good relationship. I don't know. Can you reflect a little on that relationship as a CFO?
Absolutely. Absolutely. So I would say that the fact that I had private equity experience was definitely a consideration, and I think weighed fairly heavily. I actually interviewed with 3 different people from the private equity company, just to make sure that, again, we had a good understanding of that role and of that relationship. I talk at least twice a week on regular recurring cadences with people from Summit partners. We have a really good relationship with them. But it's a very different relationship. You're right that as a controller, it's also a very different relationship than at a company that doesn't have private equity. I mean, to a certain extent, the private equity, they've got their own investment committee that they're answering to. Right. And so they might be seeing a little bit of the middleman. I might be seeing a little bit of the middleman of what's going on. So we have to be really in lockstep of what do we see as cash forecasting? What do we see as the opportunity? What are the business drivers behind the results? And so we have to be partnering together, not in a way that's, I've got to answer to, or they're kind of a pain and a noise. I really see it as a partner. And I think that that's where it's worked. We had 2 different private equity when I was at ProQuest. We had a couple of different CFOs during my time there. And while I was very involved in that, I noticed what worked. And what worked is when you really saw the private equity as an extension of you. Yeah. They are there to help you, right? It does no good if they don't spend the time and energy and get on the same page as you, because ultimately they are, let's be clear, they are looking for a return on investment. And so that's the way I see the relationship with Summit in my role as CFO, is to be as transparent and kind of forthcoming as needed, right? They don't need to know about all of the details of the day in and out, but if we see something that's coming down the pipeline, if we see something from a forecast perspective, if they have questions from their investment committee, we really need to be on the same page as them, because it doesn't do them any good or us any good if we're caught off guard or if we're surprising our investment committee. And so it's been a really good relationship with me. So far, we've again been in really lockstep. Summit again has a group that's kind of a peak performance group, and they're there really just to help us. So if we have questions on doing a big Salesforce.com renewal or Workday renewal, we can lean on them and say, what have your other portfolio companies seen in terms of pricing or leverage or movement in the market? If we're looking at lease renewals, do you guys have a broker in this industry? If we're looking at large acquisitions. So we've really leveraged them as a true partner, because we are all looking to hit those same financial targets that we set forth in the business model 9 months ago, whenever the deal was first signed. So it is a different relationship being the CFO with them, but I think the more that you see it as a partnership, the better off everyone's going to be.
And that partnership at this place in time, we're talking about AI with a lot of finance leaders, of course. Is AI part of the discussion, or part of the value that this relationship might offer? Insight into how to use it, where to invest, what not to do, what to do? compliance?
Yeah, it is. And I'd say in two forms specifically with our private equity, that is that they do a really nice job of bringing in their other portfolio companies to bounce ideas off each other, as well as have forums for discussion. So they've got one forum that is about AI and what different portfolio companies are seeing relating to the AI space, but then they have one that's more related to the CFO space. And so that's an opportunity to ask questions of other CFOs of what tools they're using, how they're finding them. We do talk about it with our partners meaning private equity, but also across the firm as well. You know, we're in this industry, being in public accounting, where you have to be careful whenever it comes to AI. And I think we spoke a little bit about this whenever we last talked at the Workday Rising of, you know, we're providing advisory services. We're providing services for a very regulated area in some of our offerings, right? Whether it's tax and how the tax is applicable and interpreted, right? Which tax can always have a little bit of grayness to it on how you want to interpret. You can't just AI that. That is the skill that we bring. That is the experience that we bring as CPAs to our clients. And so we can't just AI it. And then also, you know, we are providing a service for our clients whenever it comes to auditing and providing investors with good financials that they can rely on for investment decisions. We can't AI that either. You can use it for certain things, absolutely. But the core advisory services that we're providing, the core expertise, and with anything in AI, you really need to verify the results that come out. But there is right now, I'd say AI does have a big place in the conversation at public accounting firms, simply because there aren't as many of us accountants coming out of college anymore.
No.
I don't know if people don't find it as exciting as they used to, or if it's the need for, master's degree and different states' requirements, but there's a war on talent. And the more that we can have our campus candidates that are coming in doing work that really is using their experience, their education. I can remember being a first year where maybe you were opening mail. Maybe you were sending out audit confirmations. When the audit confirmations came back, you know, you're ripping all that mail open and logging them in. You know, we do that all digitally now. Obviously, we aren't snail mailing everything, but even so, some of those sort of tasks you can do with AI safely and add more value then to the staff, so that you're continuing to engage and energize your team to keep them at the firm, to bring them to the firm. Because again, what we're seeing on campus isn't the numbers that we used to see on campus. So AI is an important piece of our path.
In the past, you characterized, and I think it applies to public accounting broadly, as the people being curious, cautiously curious was the phrase you used about AI. And I'm wondering, in your observation, and not speaking specifically about any one firm, but has that curiosity, do you think, has it advanced? And I would think it has, but advanced into broader experimentation and adoption? Or
yeah, it is happening quickly. People are still cautious and curious. I'd say curiosity probably continues to increase, right? As you hear about more tools, as you get the email from someone or the LinkedIn post with someone of try this tool, it's plug and play, it's really easy. I would say that right now, and you probably see it too, the amount of tools out there for AI is vast. I don't know of one company, you know, colleagues that I have, friends that are in different industries where they have one AI tool, right? You easily have, you know, dozen different tools that are being used, because maybe one is reviewing the first pass of legal agreements or, client agreements. Maybe one is helping you draft marketing communications or training documents or whatever. So I'd say that the curiosity has increased. The amount of tools that are being used is increased. That's where technology plays a big role, because they really have to make sure that it's a It's a safe tool before it comes into the environment. But I'd say the technology also has to not handcuff success in the AI space, which means we can keep an eye on it and we can make sure that it's a safe product, but it's really the individual staff, the individual processes that are trying out AI where you'll have the success, right? You can't have your technology team trying every single suite of service out there because there's just too many. So you have to kind of let people plug and play a little bit and see which ones are successful as long as it's done cautiously. But yes, the curiosity definitely increased.
When you arrive here, is there any initiatives that you personally are involved with already in terms of whether it's AI adoption or AI compliance, privacy, whatever it might be?
Yeah, not really specific to AI, Jack. I would say that day one I was here, I said, do you guys do Copilot? And they said, yeah. People have it. People have different degrees of it. Some people have full Microsoft Copilot. And I said, can I get that? I had gotten so used to using it. I was so used to having it for a variety of different purposes, whether it's, PowerPoint, creating a cool slide or summarizing documents. So my own personal initiative was to make sure I had Copilot, the Microsoft suite, on day one. But in terms of more broad firm initiatives around AI, I don't have certain initiatives that I'm moving forward. I've kind of been updated on where we're at, as well as the security of it and the various tools that practice areas are using, but don't have a specific initiative right now.
Given you have a private equity partner now, given that you have perhaps some new priorities now in terms of the strategic priorities are different from this firm from the last, how do you expect to use your time differently?
Yeah, it's actually a great question. I have this little cheat sheet, I call it, that is in my top drawer in my desk that I pull out often to make sure that I'm focusing not only on what I see the biggest priorities are, but also keeping grounded and directional towards what it is we're trying to achieve as a combined ownership structure with the private equity. And I would say that I try to make sure that they're going hand in hand, but they may not be a one for one. And what I mean by that is my typical go-to style might be coming in and looking for low-hanging fruit of where we're doing things in duplicative nature, especially with the regional model, of doing things at too much of a detailed, granular level, just in general, making sure that we're getting to the value add as well as building the team. And I've had to spend a lot of time saying, this might not be level 1 or level 2 of our key initiatives we have with our private equity, but this might be level 6. And if I don't build level 6, then I'm not going to get to level 1 and level 2. And so, for example, we're very acquisitive in nature. If I can spend the time building the team and shifting them from this regional finance group to more of a national finance group, then that allows me to really get the highest and best use out of the team, to leverage from the team, to have them have a growth path, and to get the right people in the right spots so that the projects that I'm working on, I can turn to the leaders on my team and say, can you run with this?
Yep.
If I don't have that, then they can't run with this because they're kind of running around dealing with the day-to-day of maybe a decentralized accounting group. And so it does shift where my focus is and how I spend my time, because I'm constantly, again, grounding myself back to, but is this in service of our larger goal? Again, might be 6 levels deep when I get there, but what I've always found has worked for me is building the bench. And building the bench allows that it's not when you get hit by a bus and it's not when you win the lotto. It's when that next acquisition comes along or that next exciting project comes along, you want to turn to the person and say, can you take some of this existing work and really run with it in a way that challenges and grows you? And then they turn to the person next to them and say, can you take this? And what you do is you start to trickle that through the organization so that the level that you're hiring in the organization is the entry level, is the lowest level. And then people are motivated by it because they always see the opportunity to take on more and to grow more. And they know that they have a leader that wants to grow them. And so that's where I'm still spending my time in that way, but I'm trying to do it more from a deliberate way, as well as messaging it more from a, if you see me spending time on these pieces, here is why they're important. Here's the value proposition around building that team, because you want me to spend time on this, and I can spend time on that. But I'd love to have somebody on my team spending time on that, because next month you're going to have something else you want me to spend time on.
Great. Well, thank you. Thank you for that. Great insights there for us. We're up to what we like to refer to as our finance strategic moment. And this is, again, where we ask you to look back over the course of your career. It might have been 20 years ago. Who knows? But you had a moment of insight that led you to either, I don't know, pursue an opportunity, avoid a risk. Anyway, it was a finance strategic moment. What would you share with us?
Yeah, it actually kind of relates to the message I just said about building the bench and looking back 3 to 4, 6 steps, whatever it is. And that has to do with kind of seeing things more strategically, seeing what might come across as a transactional item, but seeing how it can help build strategy. And more specifically, it relates to in a prior organization. As I've mentioned, I'm in a couple organizations that have had a lot of growth during the time there. And at a prior organization, I noticed that as we continued to grow, there were certain functions that were maybe still treated as transactional in nature. However, with that shift in size, there's an opportunity to establish them as more strategic rather than execution focused. And that was around the procurement and treasury departments. So for the procurement department, we were more about making sure we had the PO in place. We knew what the matching was of the PO for the invoice. And it was more about the right approval level for the PO. It wasn't really strategic in nature, looking at the relationship, looking at the risks associated with that vendor, looking to see if that vendor aligned with our strategic path. And so shifting more of a maturity path within procurement to be more focused on those larger goals that weren't just price related was going to be more meaningful as we got to be a larger company, because the dollars are all bigger. And similarly, in the treasury function, as we continued to grow in the company, we had more cash available. Well, having some cash available that was cyclical in nature was fine and transactional and well executed and well managed. But when you look at what the markets have been like over the past several years with interest rates, and when you looked at the cash that was starting to accumulate, it really became obvious that we needed to think more strategically about our cash, about how we could leverage it, whether it was just a overnight sweep or whether it was putting it in some different investments. And so we were able to do that for the treasury and the procurement functions, and really shifting the finance organization to deliver tangible financial dollars to the company's financials. And I think it was that moment for me, that moment of clarity that you asked about, where it was looking at the fact that it can seem as a simple transaction, but if you really take the time and zoom out, oftentimes those actually can point to strategic drivers or strategic initiatives. And so it's figuring out, it's that piece of paper in my drawer, and it's looking at it and saying, is this task, transaction, activity in service to a bigger objective that I have on my overall map of where it is that I'm trying to go with? Oftentimes the answer might be no, but sometimes it might be yes. And it might have been no 2 years ago, but it might be yes now, because we're continuing to grow and we're continuing to shift. And it might now be the right time for that to become more strategic in nature. And I think that kind of taught me too of continuing to zoom out and continuing to not just go meeting to meeting to meeting, but to really take the time in your calendar and look at your strategies and look at your objective and make sure that you're keeping in mind that it might be something you did yesterday that helps you tomorrow.
Okay. Well, thank you for that. We are going to jump to our mentoring round. I think we're still in the first 90 days. There's a book there, the first 90 days. Yeah. Maybe it's on your shelf. What, tell us something about it. You've done this before. You've been in the first 90 days realm before. You had some takeaways. You're doing it again. Any thoughts you can share?
Yeah, I think a lot of the first 90 days is being inquisitive in nature. It's just asking a lot of questions. But also not being afraid to throw out some ideas. I'm often throwing out ideas and saying, look, I'm not saying I have it perfect. I'm not saying like we did it here like this and it's perfect, but just tell me why it's different. Help educate me, because the more questions you answer of mine, the more I get a basis of understanding that I can help us grow and develop. And so I learn by talking. I learn by asking questions. And so I think that's the biggest thing that I see in my 90 days is just asking a lot of questions, meeting a lot of people. I've been out to a couple of offices now and just getting to know the various people, getting to know what they do, what their experiences have been. It's just being inquisitive.
Excellent. Thank you for that. We are really up to our final question. I asked you a few extra ones there in the middle, so I appreciate that. But over the next 12 months, what would your priorities be?
Yeah, you're right. Do have short-term and long-term. I'd say over the next 12 months, continuing to shape the team, to optimize process and supporting the business, really looking to provide more timely insights to the business. When you have regional operations, then it takes a while before you can provide consolidated results. And so breaking down those barriers to provide more timely insights is a big one. Supporting our M&A track. We have a very active pipeline that we action. So continuing to take a new lens to nationalizing and cross-selling, and how does that support some of the different pipeline acquisitions that we have. And then, of course, just continuing to build relationships, building them across the firm, building them across my departments, and continue to leverage and build them across the public accounting sector as well.
Laura LaPeer, thank you for joining us on CFO Thought Leader.
Thank you. It's good to talk to you again.